I'm Angeline Ong, and welcome to your look ahead to Friday, the 12th of January. Wow, what a busy week it's been after that CPI number, which we'll get to in just a moment. But on Friday, it's no less busy. We've got the consumer price index, this time out of China, and also its producer price index too. Just checking in on the dollar, US dollar versus the yuan there. And as you can see, it has been coming off that 71,900 level. But this is also very much a US dollar story, if not all a US dollar story. We recently had data showing that headline CPI out of the US rose 3.4% in December on a yearly basis versus a 3.2 increase expected, so slightly hotter than expected. And on a monthly basis, it rose 0.3% instead of the 0.2% rise expected. And what that did was it made the dollar rise. Just showing you the minute chart here, as you can see, there you go, better reaction there. And also on all the markets, we had a brief fall because it somehow or another meant that the expectations of this US Federal Reserve rate cut is dialed back even further. But really, this is all a healthy readjustment of expectations between traders and also the Federal Reserve, a gap which has been widening in the last few sessions. From the UK, we are looking out for the GDP figure, monthly GDP, might I add, along with industrial production details and trade balance data as well. Watch out for the producer price index out of the US after that slightly hotter than expected CPI number. Baker Hughes, that oil rig count number will also be one to keep an eye on, given there's been so much volatility in the oil space recently. In terms of earnings, we've got, or rather trading statements, we've got John Wood Group handing in its trading report card, along with Vistry as well. But the big key pivot point of the week in terms of earnings comes from the US, where JPMorgan Chase, Bank of America, Wells Fargo, and Citigroup will all be turning in their report cards. These big banks not only serve as an indicator of the other industries, but also their earnings will set the tone for the coming earnings session. Many analysts covering the space have said that they are likely to show lower profits in Q4. This is because many banks in the US set money aside to cover souring loans, whilst also paying more to depositors as interest rates stayed high. It'll be the net interest income, the difference between what they earn on loans and pay out on deposits, that will be key here in determining whether these banks had a good or bad or worse than expected Q4. Also checking in on Citigroup, because we had data out today suggesting that Citigroup has booked around $3.8 billion in combined charges and reserves that will erode its Q4 earnings. This is according to a filing. And last but not least, we also, aside from the banks, will have fourth quarter earnings from United Health. And that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. IG Jeremy Naylor will also be on board at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong and at IGCom. This is IGTV.